Hello, everybody, and welcome to, of course, the weekly webinar now on YouTube Live. Guys, this is an exciting episode. There is a lot to discuss. Tyron and I are going to be covering the indices today, the major indices around the world. Obviously, some of the stocks and shares that you guys can be looking at from technical analysis perspective at the moment. And, of course, we'll be getting into our currency discussion as well. Tyron, it's been an action-packed week. What do you think about this market right now?
I'm really excited about this market right now, Thomas. I reckon we've had some great moves. I reckon the scalps are there. Yep. The longer-term trends are starting to kick in. I reckon we're going to get some real action soon. So we'll look at some of the key levels on the indices. But I think we've got some good stocks that you've pointed out as well. So we're going to look at the currencies and the stocks of choice for this week. But before that, we better go to our risk warning.
That's right, Ty. So we'll just quickly bring this one up, guys. Obviously important to note, let's say 15th. I thought this is always funny, Ty. Which office is better, guys? The hodler's office or the day trader's one? I like both personally, Ty. I like the day trader's one just as much.
Quick risk warning.
Yeah, you could do both. Why not do both? Exactly. Day trade in the morning with your office and then go and play golf. It is important to understand that any of the information contained, of course, this live stream is purely for educational purposes, and the information presented must be considered only general in nature. The information provided will not take your specific needs or circumstances into consideration, and you must look at your own personal situation and requirements before making any financial decisions and seek independent financial advice if necessary. So now that one's over, Ty, let's get into the charts. And of course, we love talking indices here on the channel. We'll move back over so everyone can see us. Hey, everybody. So ASX 200, Ty, one of our favorites. We talk about it quite a lot. Obviously, we're in Australia, so we do like this one. What are your thoughts on it here? We've got that trend line that we've had really playing out now as a buy the kind of dip scenario. We've seen a slowdown in the market here in Australia, and we've actually closed below that all-important kind of 7,420 zone. What do you think about this one?
Yeah, I actually do like it. I think it's playing the game now. We're about to get a 2050 cross. It's going to happen. It's going to break down underneath that trend line very, very shortly, the 20 moving average. You can see that there. But also, I think it's looking like a flag. Like on a daily, we might draw it up. If we'll highlight it and draw it up a little bit. It looks very flaggy to me. It's come off the good thing about flags, and you got to remember this, like flags in the middle of nowhere again aren't that powerful, but a flag coming out of a consolidation zone, which is what we had here. Like we had weeks of action basically floating between 30 and 50 points, right? Like you can see that there. Very wicky. Really, really tough trading if you're trying to break out of a zone, but very good for scalping. But now we've broken out, and you can see the moving averages are all but crossed. The last time these two crossed, boy, oh boy, Thomas was in nappies. I reckon it was about 6,500, 6,400. It was ages ago on the daily. So
been a while, yeah. So
it
hasn't really. Last time these crossed over was actually all the way down here.
Yeah. Oh wow, 5,800. 5,800.
Yeah, 59, yeah.
Nearly 5,900. So in I guess to highlight that fact, it's a very, very important cross, right? Like this is no mucking around here. I don't think it's going to stop, primarily because we expect the next couple of weeks in September are probably going to be weak. We know they're traditionally weak. The market is indicating that they're going to be weak. So if they cross, it's going to be the first cross since 5,800. Now that is effectively more than 1,000 points ago. You're talking about the best part of 1,500 points. No laughing matter. That pattern, I like it because it plays straight out into a support zone, straight down into the 7250-ish area. Pretty logical target. But I think that's the first stop. And if it stops there and consolidates there, then maybe we can start looking for a reload. But you've really got to let the market play the game there. You're not going to just jump in and keep shorting it all the way. Let the technicals play the game. But I think that's a very logical area for the flag to aim for. One, because the flagpole length for each of it. So, we know straight away that it's actually a good area. But I think that it's the next place that we're going to find some sort of support. If it breaks there, it's going to go probably to 69, 6,800 again. Not unrealistic, given that, that move from there will be a third wave, fourth wave actually, going on that. But it's setting up for it. It's going to take an awful lot of market momentum on the upside to stop that 50 and 20 cross. So we'll see what happens with it, but I think a really good trade. I like it.
Yeah, I think this is in line with our S&P 500 thoughts as well, Ty. So we've got some great stats here. We'll bring up the S&P 500 first, and we'll talk about this 50 exponential moving average. We've discussed this a lot. through the stream, through obviously our FX Evolution live streams that we do every day as well. And this moving average has been exceptionally good at, getting that buy the dip style scenario. We've seen pullbacks into the zone, but usually they've been actually quite aggressive on the sell-off tie. It hasn't been this slow meltdown like we've got right here. It's been 2 or 3 big days, hasn't it?
Yep, I agree. And I think this is a considered move now. Like, this has been one of those moves where the market's had a really good time to, I guess, understand what's happening, consider the levels. I don't know. It's, I know we say it every time it touches it, and we're like, oh, wow, this is the one, this is the one. At some point, this 50 is going to break, right? We know this. Anyone who thinks it's not doesn't really know how to trade, because that's just not what happens. Market don't stay above 50 moving averages forever. And when it does break, it's going to be significant. So just bear in mind, we're not going to preempt it. We're not going to trade it until it does. But when it does, it will be a significant event. Make no mistake. And we need it. A healthy market needs to pull back. We know this. We say it every week. So don't be disappointed by it. The only people who are disappointed by that are people who aren't shorting the market. And if you're not shorting the market, then you're leaving, half of your trading opportunities on the table, because you should be able to long and short. So realistically, if you don't want to short and you only want to go long, look for the pullback as an opportunity to get in at a cheaper price, add more to it, or even enter for the first time. So we know, look at this. This tells the tale, really.
It does. This is the statistics of how many months in a row we've been up. We talk about this stat a lot, and I think there's 2 really big takeaways from this tie. Number one, it's very rare for us to actually be in a market where we've seen 7 or 8 months in a row of strong S&P 500 gains. But then when we do get that weakness come through, whether it be on the 8th month, the 7th month, etc., there usually is 2 months of slight volatility. You see it's a bit over just over a coin flip. 64% of the time it's positive the next month, but very minimal. And I think the real tell here is that actually markets tend to do quite well after that. So we've got strength here. We're not arguing that there's strength in the market, but there is time for a bit of weakness, which is getting statistically very close. If we get through that 50 exponential, then we've got a compelling story to go with that little bit of weakness. And then, of course, we've got a very compelling story in 6 months' time to be at all-time highs as well from the stat point of view. It's good stuff, isn't it, Ty?
Yeah, I like it. I think the opportunities, leading into Christmas are going to be really, really good for both scalpers and, trend traders, really. So, I mean, you look at it, it looks difficult to trade, but then you put it down to the smaller time frame, and you say to yourself, well, how can you not trade that? Like, it's the things we talk about every single week: pull back, short. When it's in a downtrend, we know it's an established downtrend now. And the other thing I was going to say about the S&P or the ASX 200, actually, rather, that is definitely in a short-term trend now on a daily. It has been a long time since it made a lower high and lower low. This is about to do the same. So it's significant, and you can't ignore that. You can't ignore market fact, right? You can try, I suppose you can choose to, but you shouldn't. You got to trade what you see.
That's right. And look at this 20 moving average here. We've basically had, if we go back to the daily, we know this level, the 44.90 was the 20 exponential moving average. We hit support once this week. We hit support twice. And as we discussed, this level was the level where the bears and the bulls were fighting it out, Ty. And every time we've seen rallies into the open. So we've had a bearish day on the S&P 500 from what Wall Street's doing. Then we've got that bullish movement through the futures markets, and then we're seeing a bullish open trapping the retail trader. Remember, the retail hour of power, as we call it, Ty, is the first hour. Everyone loves trading the first hour. No one loves trading the close, where Wall Street are or where the bigger traders can be. So yes, that retail hour of power is going aggressive and then getting those sell-offs, and that's why we've got these highlighted boxes. We move over to the Nasdaq. It's the exact same story. If we bring that up now, US 100, this is actually quite easy trading if you think about it. You've broken the support, you've retested, you've gotten those shorts. Not bad.
Yeah. I think the consideration has been there for this short, so I think it could be a little bit more sustained that people are probably giving it credit for. Don't be fooled into thinking, we're in the middle of the month now, the short is over. I'm not so sure about that. Let the market tell you. We always say technicals and price action is going to lead the way. This is no exception. I mean, far out. You couldn't possibly be missing these, could you? If you were trading this for the technicals, you couldn't have missed those shorts. Surely.
Look at Bradley B there. It says 6 green days in a row scalping the QQQ. So obviously Nasdaq, SP 500, and AAPL.
Nice, Brad.
And I know for a fact Bradley's been in the streams. He's been doing well. So look, it's all about bringing in the biggest statistical facts for you, and that is of course finding these key zones. And I know Brad's been doing that. By the way, guys, if you can smash that like button, it does help us out. Remember, this is our little channel. We obviously use this to do our private hangouts and to, of course, do our Wednesday webinars. So, guys, if you smash the like button and subscribe as well, we're looking to get this thing up over the next week, and I believe we can do it together as a community. It's going to be good. So, Ty, look, all these markets are really interesting. I think there's been some stocks as well that have really shown some weakness coming through. One of them's been Apple. We saw a beautiful trade here as well with the trend line that got closed below. Then it's come down, it's consolidated at this zone, and it's actually closed below that. Now, when Apple goes, we know it's a huge part of the Nasdaq, a huge part of the markets in America. If it's closing down and moving lower, then we start to think, well, this is going to drag the index with it, isn't it?
Yeah, I'd say so. Not even the iPhone 13 could save it. Damn.
Not even the iPhone. No, well, that happens a lot. Buy the rumor, sell the fact happens a lot.
Yeah.
And also, I've got to say, I'm disappointed in the iPhone 13 time. Next year is the good iPhone, guys. The better one.
Well, I mean,
one
at the end of the day, though, what else could they possibly do to a phone, though, really? Like,
take away the notch.
Yeah, well, that's true.
The notch. Yeah, they're going to do it next year. It's going to be a little camera, and that's it. That's all they'll have.
Is that true? Yeah, okay.
Yeah. Next year, Ty. Don't worry. We'll be the community will be loving next year's phone even more. But they can always do things. It's just the question of are they continuously innovating, and how many things do they want to add? Each year has to be a little bit better, kind of like a car. Let's move over to what I think is a great educational story. And this is talking about a currency here. It's the Euro odd. And I just wanted to discuss this with everyone because Tyron and I, we looked at this. We love this particular type of trade. And I think it really exemplifies some of the things that find or basically show us the way of how we can read the price action better. And I think that you guys will enjoy this. So we all know about long leg dojis. Obviously, this one is an indecision candle. At that point, what do we know, Ty? We know the 20 exponential moving average has been hit from the resistance. We know we've got the long leg doji. And then if we close above that, then we may have made a decision and we can move to the next level. We've then got this beautiful rejection candle. Some people call it a pin bar. We'll call it just a big rejection candle. The story here is that the market sells off, buys back up. Then we've got the story again where the market sells off and buys aggressively back up. And now we can really pinpoint this zone as a zone of importance, Ty. And this is when we start to bring all of our interest in here and we set alerts, don't we?
100%. Now, everyone's going to say, oh, wow, what a great time to enter. Really? Right now? Is this where you enter, Thomas? No, because it's right at that point of resistance. So, you've got to really, really be careful. If you enter on the right candle, great. But now you don't just go jump in because now it's testing another resistance. What are we going to wait for, though? A retest of that zone? Damn, that's a good entry. Come back to the 20, and then you know where your high is going to be. Like, it's already predetermined pretty much. So we've got plenty of blue sky above that, but it's a very, very dangerous level right where it is now. So you want to wait for that pullback. This is where people get a little bit trigger happy. They just jump in because they see a brand new high and they've missed the initial pullback or they missed the initial break and they just jump in. You've got to be really, really careful when you do that because that's where the market is likely to reverse. So, but this is a good trade. I think it's got a lot in it. In saying that, it may pull back. So you've got to be really careful. If you are jumping in now, you got to be really, really careful that it doesn't pull back on you and take out a stop. So be really, really careful there. But good trading.
Mark's done a good job here. Says been scaling long since the break at 160808. Exactly the level there. And when you go through the timeframes, and this is why I wanted to talk about this level, is you can actually scale very easily here. And this is what we talk about in stocks, we talk about in indices, and we talk about through the currencies as well and commodities, is scaling is the key here, guys. Yeah. You get your 1 hour closure above, boom. You get the 2 pullbacks here. You've got ample opportunity to get your extra scale in. And then we're seeing that strength come through. Also 1 hour 20, it's an amazing pullback area that's been happening as well. So I think if you've already been in this, those dailies exemplify a lot of the things we talk about, recognizing the war between the bulls and the bears.
Look at the 1 hour pullbacks to the 20 moving average. Like, you're looking for entry points. There's your entry point. Not now. Not when it's trying to test a new high. When it comes back to the 20s. Like, you had to look up any opportunities. You had really good trading. Dave, did I see right? I think Dave said that he's still got an iPhone 6. Is that true? I don't think you can even do the scan. How do you scan your QR with that? I don't think they do.
I've got an iPhone 1. You remember that one that didn't come to Australia? Yeah. I love that thing. I love that thing.
I do remember that one.
Barely turns on now. It's got, I think, a swollen battery, but they're great. I mean, I've got to say, I watched that Apple thing with Steve Jobs in it when he released it all high. What a public speaker. He was a phenomenal.
He was good. Yeah. iPhone 7, Dave says, that's a different story. iPhone 7's a big advancement for the 6. That's more than acceptable. Absolutely.
Okay. We'll keep going through some stuff. Let's have a look at the dollar index, because I want to move into gold and just discuss it, because we've got a few gold bugs in here, and Warwick might be out there right now. And look, dollar index is interesting because we go to a 2-day and we basically have a huge amount of indecision. The market is in what we call the quadruple witching week, which obviously is when all of the options expire on the Friday in America. We've got all those different markets. In fact, I have some information here if people aren't aware of what it is. Here it is. So basically, you've got here the stock index futures, stock index options, stock options, and single stock futures all expire simultaneously. And while you think that might not be linked to the dollar index, I think what's happening here is because of the CPI data, because of the uncertainty right now, we're still looking for a clear direction here, aren't we, Ty? Long leg dojis on the 2-day. Look at this. Break above. Let's keep going. I'm thinking, here into 93.50, so around that 93.20 zone to 93.50, and then break below. We come back down and test 92 flat.
I do like the 93.50 at the 200 moving average. I reckon is a spot on for this one. I really like it. I know we've been calling it for a little while, and I just think it's about to do it. Like, you can see that it does really want to get above that 20. And I think the euro really wants to go short. I think the euro is just starting to look like it's about to tip over. We will touch on that in a minute, but it's direct opposite, of course. Are we going to go into gold first, or are we going to do the euro?
Well, we might as well do the euro first, and then we'll move over to gold. So there's the euro. There are two ways to always think of something at a critical zone. One of the ways is, I think, the resistance up here. We close above that. Ty and I were talking about it. We like the long after this point. So this is where you close past all of the little resistance that we've formed, 1.19 to 00. We get through that, and then we're starting to talk even about inverse head and shoulders. But as Tyrone mentioned, we weaken here on the euro. We bust through everything, and we come all the way back down to the 1.16, probably 5.5. Let me just show you.
I think we have we definitely have probably 115 party, I reckon. That's the first point. That's the first stop, 116, probably 50, is it?
Yes, that's 116.72.
Okay.
And then the next stop is 116 flat.
Yep.
Great level down.
I mean, it could be a really big inverse head and shoulders. Like, it could definitely do that, but my preference is not that. I think I would rather see it go down, because I think the move down is just a little bit more solid. I think we'll trade both. I think the up's got a lot of work to do, because two things for the up, right? Straight away, it's got to go into that resistance zone. So it's going to get to the neckline of the inverse head and shoulders straight up. And that neckline is an extraordinary resistance. You know that. We've seen it. Huge resistance. So it's not a standard inverse head and shoulders where you say, well, great, if it breaks the neckline, we're off and running. I think that if it breaks the neckline, it's got a lot of work to do even past that point. So it's one of those ones where you'd say, are you going to trade the standard pattern, or are you going to trade the conservative one? That's a conservative for mine. I'd be looking for the conservative only on that one. Let it break first, come back and test it. Then I'll be convinced, because at that point, the dollar index would have to be at least into the low 91s. But that's not, I'll trade both. There's no question about that. But the short just looks a little bit more lucrative, because quite simply, it's got less to do. We always say, the less in front of it, the easier it's going to get there. And this is a perfect example of that.
So watching the close either way on the dollar index, long leg doji, remember, decision made if we get past either of that high or the low, and then we can start to look at that direction. I do want to discuss gold, because gold, it's super, super interesting with that close off the CPI. So we saw what I like to call the classic stop hunt yesterday during news, Ty. Take a look at this one. I want to show you the 2 hour. This is pretty good. So we have that level down here, and we talked about the 1780, but a lot of people probably had stop losses underneath these wicks. We have that instantaneous CPI data come out. It falls down quickly, just like bang, 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 goes down very, very quickly. We know that's the type of thing that happens. The stop hunt gets thrown out. Everyone's stops gets taken off that's there, and then it quickly reverses. That's classic, isn't it? Yeah.
It gets them every single time too. Loves it. I'm starting to think this is long, Thomas. I'm starting to like it from 1800.
I like it.
It's got a little bit of work to do. I want to see it make a new high, probably close about probably 1815 maybe. 1815 is probably the level, but then it's got an easy road up to about 1830, I reckon. It's good trading this. I think that, in the shorter term, this could easily have a 1900 in it. I know that's probably a little bit extreme, and you're probably going to say, Ty, what are you talking about? But what are you talking about? I'm telling you, if it gets past 1830 and picks up a bit of momentum, 119 will be the next place. It'll pause at 1850, but 1900 will be where it goes. It wants it, and that's a logical place for it to go. But it's got work to do at 1830. That's the main target straight up. So that's one of those ones where you play the game. You're going to play 2 trades, one to the 1830, one to the 1900, and that way you're going to take all risk off the table and scale in. This is the exact scale in that Thomas is talking about. He goes on and about scaling in. This is a perfect example, absolute perfect example. Because look, at the end of the day, if you do get the move, you're going to be in with a lot more contract with no risk, or no extra risk, I should say. You're still going to have a little bit of risk, but no extra risk than you would have had to initially. So that's why we scale in, and I think that's the level that you're going to do it. Is it going to go blasting through 1830? Probably not. I mean, it might, but I wouldn't think so. Not without a bit of a pause. So let it do its thing. Let it close above sort of 1815. Go for that $15 burst. Then off to 1850, 1900. Love it.
Yeah, I love just where it even is right now. This rejection wick, and then closure above. A lot of sells are going to be feeling the pain after yesterday. We're above the 2050 moving average. We're seeing that as acting as dynamic support even as we speak. We are getting a little bit of consolidation after that large move. We start to move above that 1810, 1815. As Ty said, 1830 comes very open. Yep. And once we get past that, it's on. That's when you'll start. You won't even see it in the papers that much either. It won't come into the news until it's at something like here. Remember, this final stage here is when all people talk about it. Down here and here is where we're talking about it. It'll
only come into the news when the news starts talking about it. It'll be at 1900, and they'll be predicting 2200 on it. And once they're doing that, start to get your sells in. Brad asks a question about how would we educationally scale in on gold. Brad, that's such a loaded question. I love it. I love what you're trying to do. All right. What you do as an educator, I'm going to say this is an educational channel, and we're not giving any financial advice whatsoever. Please seek your financial planner's services before you make any decisions, or message Thomas, whatever you want to do. But straight up, you buy the break that we're talking about at 1850. Okay, you enter on a closed candle there, and what you're going to do at that point is you're going to
wait. So you mean down here?
Yeah, no. Well, I'd be waiting for the break at 1815. So wait for that area to break. You got to get a close above there. Let that break there. Take a trade to the 1830. Now at the 1830. Okay, that's where you enter, and you wait for that area to break. That's where you enter a new position. But what you're doing is you're at least moving your stop loss on the first trade right up. So if it fails from that point there, you're going to not effectively lose anything, right? So leave some profit on the table. Put your basically behind the load like we've drawn up there. That should put you in a basic position where you can't lose money. If it comes back, it'll stop out both trades, but one of them is going to be in profit, well in profit. Now, if the market continues on, you've got 2 positions long going to 1850. Okay, so you got very little risk because, well, you got no risk actually, because even if it comes out and stops them out, you're going to make profit on one and lose a little bit on the other. So you're already in with 2 trades. When it gets to 1850, do the exact same thing. Okay, so at the 1850, you wait for the break. Once it does that, you reload another position, break even, and move the stop losses up again, up to the higher low, and then all of a sudden you're going to have 3 positions going to 1900 with effectively no risk. In fact, you can't actually lose because you're going to definitely have profit at that point. If it reaches the 1900, full profit, you're going to have 3 full-size trades getting there without actually adding any. If you were risking only 1% per trade, for instance, you've never in that situation risked more than 1% at any given time. But if it gets there, you're potentially going to make 6 or 7% on that trade. Does that make sense, Brad?
There's good indications as well that you'll generally start to see weakness or consolidation before these key levels. You know, we mentioned the 1850, 1860 area. We mentioned this 1830 for a reason. We know huge resistance is here. Before you crack huge resistance, you either need news or you generally consolidate on price action and then move higher. When that occurs, you get those stop loss zones.
Very educational. Great, Brad. That's what we want to hear.
Yeah.
Awesome. But in all seriousness, Brad, that's how we do it for all of them. That's how every scale in, that's effectively how it's done, okay? So you just follow that that load up schedule, and you're never risking more than what your initial trade should be. But if it does reach the promised land, you're going to have a lot of profit in your favor.
Got a question here from Ben. Just says, what are the blue and gold bars on the side of TradingView? Yeah, these are just volume profiles. So fixed range, visible range. That's the visible range. And fixed range you use. We'll do a video about it so you guys can see how you can use that to help you out. Hero has a question about TLT, Ty. So this is obviously the 20-year bonds in the US. And they have been rising. Now, this is one of the things that we've always talked about and we want to be looking at from the perspective of if money is fleeing the stock market. If bonds go up, traditionally, that's one of the safe havens. Now, bonds aren't exactly great at the moment, are they, Ty, from returns? So it's mostly a safe haven play. And 20 years are no exception to that. So we've got a very strong couple of days here. Very, very nice, I believe, decent anyway, break of a little trend line down here. I mean, look at that. Do you like that one, Ty? I like that. That's not bad at all.
That's pretty good.
Break. And this can precursor a more consistent approach to pulling back in the market. Ty was talking about before, it's not just 3 days down hitting the 50. This is multiple slower days down. And where the speed's going to happen is if it gets under that 50 exponential. Expect TLT to boost. And at the same time, we're going to expect, of course, the market to get very ferocious, increasing in volatility, etc. Yeah, I like the TLT. It's good. I think it's pretty strong.
Yep, good spot.
Yeah, good spot. Good. And a few people have been in that for a while. Kunal says, there'll be a single wick that will stop you out, in my experience. It's all about putting it in the correct SL levels. So it's easy to say when you recognize those key resistances that Ty was talking about, there will be consolidate ranges. Now we talk about in the course, one of the things that we talk about a lot is adding percentages behind that to eliminate the wick hunt. So yes, the wick hunt does happen, but when you put in some of the things that we talk about in our Ultimate Trading Masterclass and mentoring program stuff, I don't believe you'll get hit as much. In fact, I know that you just don't get hit as much. There are correct levels to be putting in there.
Yep. So, and the thing is about a trend too. You got to remember, guys, when you are trading a trend and a breakout, you don't really want to be predicting when it can end, because a trend can go for a very long time. So until there's a serious resistance or support zone in front of it, who knows how long it can go. But every single pullback is an opportunity to scale, and you got to look at it that way. In the day, we used to measure our success by, we used to call them baggers. Yeah, if you got a 7-bagger or a 9-bagger or a 10-bagger, that's effectively what we refer to as a 10-to-1 trade. So, 10 reward to the 1 risk. And generally speaking, it's very difficult to get those without scaling in, right? I mean, if you're going to go for 10-to-1 trades, you've either put your stop loss way too close or you've got really, really lucky, because it's very rare that you can get that in one hit unless you're going for very long-term trades. But if you're scaling in, it's very, very achievable. Now, put that in perspective. Let me say that slowly. 10-bagger. So 1% risk, 10% gain. That is a big, big trade. I mean, if you did that every month, look how much you're going to make. So that's how important scaling is. You're not going to get it on one trade, but if you identify a trade early enough and you can actually scale in, big, big plus. So it's a good thing to practice, and it's very, very, it's very safe at the end of the day. You're not actually adding any more risk. All you're doing is potentially losing some profit. The risk is that you're leaving a little bit of profit on the table if it keeps coming back and stopping you out, right? But at the end of the day, you're not going to go broke doing that. Hey, Thomas.
No, absolutely not, Ty. It's all about scaling, 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 as we say. There is a lot of importance in those types of things. Here we have a stock, Ty, that I think is creating a little bit of interest, though it's not moving very much. And that's, of course, Zip. We know about Afterpay. Everyone knows about that because of Square. This is another similar like service, obviously an Australian stock. I just want to highlight it because we have a very clear level of support. Now, we know that this stock has little rallies on it. So we've seen them talk about going into crypto recently as well. And we're at a base formation. Now, we've got a bit of a downward trend line. We've been basing now for quite a few days. And I just wanted to bring it to people's attention because this is the type of thing where no one's probably talking about it right now. It's finding base. And if it does break out of these little ranges and break above, of course, our downward trend line, it can create some ferocious opportunity. In this case, it would be something about that $8 from the take profit side. And of course, the accumulation area would be here. So we'd be looking for a breakout of around that 715. It's just something that we always watch. We go in and look at these stocks. This is something we do when we're scanning. If we find a nice level of support, we'll draw it up, we'll set alerts, and we'll be prepared should we get those alerts in the morning.
Yeah, I think Thomas said the magic word there: preparation. Preparation. Have preparation. Know where your stop loss is going to be. The most important thing. Have your take profit expectation if it's a sideways market. Understand if it's trending, and yeah, you're 3/4 of the way there. We can tell you that a lot. Craig asks a question about EAs. Craig, if you're going to do the mentoring program, you are in for one hell of a treat. Let me tell you that, because everybody who does the mentoring program is going to get our specialized, created by us, built on our trading methods, entry EA. Okay, so what it's effectively going to do is look for pullbacks to the key areas that we talk about. It's going to allow you, it's a semi-automated type arrangement. It's going to be really, it's so close to being finished. I know the people who are doing the current mentoring have seen it in action and they're very, very excited. But everybody who does the mentoring moving forward gets it as part of their mentoring package. So, and speaking of which, I think we have to drop the link because it is live. The mentoring is starting. What date have we got for the first week? Is it
so? It's starting in first week of October.
First week of October.
And obviously, it's closing in only a week or so. So not much time, but spots are filling up. They are limited, guys. We only do a certain amount.
100% limited. Yeah, very, very limited spots. And I'll tell you, I'll let you in another secret. Aside from the mentoring that we are putting, limited spots on, we're going to run them every month, and the course starts every month. But every month will be limited. Why? Because there's only two of us, and we want to make sure that everybody gets a tailored approach. And if we take on too many people, we're not going to be able to do it properly, right? So we want to make sure that everybody gets the attention they deserve. Will we scale it further in the future? Well, probably, but it's awesome. The other thing that it's going to be limited, and it's literally, I reckon it's going to be out by the weekend, is the options course. We are going to limit the sales on that one. And there's a couple of reasons why we're doing that, because we feel that we're going to have to probably support the options course quite a bit inside of these videos, and we can only handle a limited amount of questions. Now, I know a lot of it has already been not pre-sold, but I know we've got a lot of orders in the system wanting to get it. We are limiting it to 100. Okay, so that we're going to keep probably till at least the end of the year. I'll give you more information on that in the Q&A tomorrow night. So if you're interested in the options course, definitely do the Q&A tomorrow night. It'll be 8:15 Melbourne. It'll be 9 o'clock Melbourne time tomorrow, and I'll give you a lot more information because I think we'll be taking pre-orders by the weekend for it. It's getting very, very close to the first couple of modules being released, but we are going to have to support it, and we're very, very mindful of that because everybody knows that obviously options are very close to our heart, and we want to turn you into expert options traders.
We do love options, Ty. There's nothing better than making a bit of money on credit spreads. I do love credit. Speaking of credit spreads and where a lot of people do make money against the poor Tesla traders, let's take a look at Tesla here, Ty, because I've liked this stock and I've actually liked AMC, surprisingly, from a TA perspective. Remember, it's all about the TA, guys. It's all about learning the key zones. Obviously, if you like the stock, then that's even better. But this is one that's been rejecting for a few weeks now. So we've had very strong price action off this trend line. I mean, this is the level that if it does, let's say the market does tank and falls through the 50, I think there will be buyers at this trend line in the future if that was to occur. But we've seen very strong price action. And I brought up these stats, and I've got a couple of option stats actually to bring up here. Let me just quickly see if I've got this for everybody. Where'd I pop it? I want to talk about them in a minute. I may not have them on my screen. Basically, with Tesla, there's been a huge fight between the puts and the calls around $700, and 720 has been stacked with huge amounts of calls. If you actually look at it, there is more puts at 700 than calls, and that's very rare for Tesla. So we have a nice base that's being formed around that level. We've got great 725, 726 rejection, and I would like to see one more follow-on day bullish here, Ty, after a rejection hammer like that. We get another little bullish day. We break that 760, and we could be totally off, because on the weekly, take a look at this. We have not seen Tesla break above and close this 740 for a very long time. This is serious business.
Yeah, 100%. You know what would be really awesome? I don't even know if it's possible just yet, but it's something that we probably should investigate. Is if you can get the options open interest on the sidebar, like you got your volume there, that would be pretty cool. Is that possible? Can you make that happen?
Can I make it happen?
Can you make it happen?
I don't know.
I like that'd be great for options traders in particular. Yeah, that'd be something that
we have. I mean, we have it on our robot in terms of you can see the open interest, but yes. We don't. I'm not sure about in here. I'd have to have a look at the indicators. Let's. So yeah, I'm all on about the weekly Tesla here. I want to see weekly 740 plus closure. I think that's going to be significant. So watch this one, guys. If you like the Tesla, it's some serious levels. I also just want to bring up this one because again, I need AMC, the real stock here. I just think this is a really key zone that it's hit, and I just wanted to talk about how, again, great TA, great closure above, little bit of rally, hits the take profit, which is the previous support, and then there's the previous support. We hit that resistance, long leg doji, and then, of course, get that weakness coming through. And look, today, pre-market is down more. So it just shows you that recognizing the key zones, again, helps you take that good profit.
Nice one. We've got a... yes, the Discord bot in FX Evolution's chat room is amazing, Monica. I agree. Are you using it? Are you using it much? I know a lot of people are. It's really, really, really good. We've got a question, and you know what? Xander is asking about BHP. And, Xander, Thomas and I had a discussion about BHP. We are going to look at it. I wanted to bring it up. Thomas didn't want to bring it up because he thinks it's not worth talking about. I agree with you. I think we should look at it. And I think... after this. All right, well, let's have a look at it after this one. What do you got here for us?
Yeah, we've got ABBV. Would 103 levels be good level to coincide with the volume profile? So I think the strong volume profile is obviously a lot to do with what you're looking at. So this is the level. I particularly like the 102. So I think you're very close. This level down here, you are right. This is falling off like a absolute falling knife though. So as we've got a rule, there is no FOMO buying when it comes to the falling knife tie. We need to see hits this level, makes a lot of sense around your 103, 102. We find the buy bounce. We either create consolidation, which would be excellent, and then we move long, and that's where we pick it up, or we create a lightning bolt. I would actually prefer here probably the consolidation play and then the movement up.
I think you're right. One thing you've got to be really mindful of, team, is that if you see candles like that falling, like basically coming down in an elevator, as we know, when the market really accelerates on the way down, do not just try and attempt to trade the first touch of that support. You're going to get stopped out probably by an over aggressive move past that support. I wouldn't touch that. And don't forget, the bigger the time frame, the more important the reversal has to be. So if I see a 1 week, basic action like that touching the support line, I wouldn't be touching that until I've got a daily higher high and higher low sequence lightning bolt. A daily, not a 4 hour, not a 1 hour. It's got to be a daily, because if you have 2 weeks of action that's fallen so far and so sharp, it's going to take a little bit to hold that up. I want to be waiting to make sure that we see this on a daily chart before we start going along on that. Otherwise, you are absolutely, having a guess, really, and that's not what you want to be taking that out of your trading. Like look, sometimes you're going to get it right and it's going to go straight up and you think, wow, I'm the best trader in the world. What does Ty know? But, 9 times out of 10, you're going to get burnt. Yeah, and the thing is, what you want to really be doing is actually focusing on consistency and actually getting good quality entries rather than trying to pot luck that one touch. So wait for, if it's fallen so sharply, it's going to have a lot of upside if it does turn around, right? That's the thing. If it turns around, it's not going to stop after a couple of dollars. It's got a long way to go. That's exactly where we've circled up there is probably where it's heading. So you got plenty of time. Wait for the momentum to shift in your favor, and then you've got confirmation. Confirmation is key, and the bigger the time frame, the more important the consolidation. So I like this trade only when it does what we need it to do.
Yeah,
100%.
You can't catch that knife. It's going to be very dangerous. So you want to talk about BHP, Ty, and obviously all of these ASX stocks, all of our favorite iron ore miners are getting frankly belted. They are coming down at some aggressive rates here. FMG probably almost looks the worst, but it's underneath this previous resistance. So we had this line here for a while. Now, this is a good example actually of why you don't just buy the dip. You get sell off, sell off, sell off, sell off, sell off, and then a lot of people are going to be like, oh, I'm going to buy this zone, or I'm going to buy exactly where it is, $40. It makes sense, $40, logical number. The big issue here, though, is we want to still see that turnaround, don't we, Ty, ideally? And BHP can go down.
Make no mistake, BHP can be in the high 38s or the high 30s in an instant. 38 is probably a really good level. 37.50 is a very, very important level. And you might think that 40 might hold it, but I wouldn't be so sure about that. You want to be looking. Look, here's the thing. There are two ways to do this, and we say it all the time, but this is probably a really good example. If you are an investor, okay, you're not a trader, you're looking for a good entry point to hold it long and potentially get some cap gain in the future, then buying it, there's nothing wrong with buying it at $40. You don't have to wait for it to bottom out at 38 or 37 because there is a chance that you might miss out. But there is a chance that you can actually do both. And this is why we say, and you're going to know more about this when you do the options course, of course. But if you sell a put there where you would be happy to own it, you're going to earn really, really good premium, because one thing that happens, well, Thomas, tell us what happens when the market falls like an absolute knife from $52 down to 40. What happens to the premium?
It goes up, Ty, and implied volatility spikes heavily. So, of course, that is the options seller dream. Now,
the dream,
you want to do it cash vetted, but
selling a put on BHP at the moment is like an 18-year-old who's just got their license. Mummy and daddy have bought them an M5 that they're not even allowed to drive. And they've already been done for drink driving, and they've lost their license trying to get insurance. That's what it will cost them to buy insurance. That's what someone is going to pay to protect BHP that's fallen. That's what it's like. That's why the premium is so high. The bigger the risk, because this is perceived to be a really big risk, right? Because when people see BHP falling like that, they say, well, it may not stop. I really need to protect my portfolio. Oh my God, I'm going to go broke. Let's buy puts to protect it right here, right? So that's what happens. They buy the puts. Guess who they're buying the puts from? The put seller. That's why the income's so high. So if you're happy to own, if you're investing and you're happy to own BHP at 37.50, then it's an awesome place to sell a put, because you're going to get really good income. Your average price is going to be the 37.50, minus the premium. So if you receive, maybe, let's just round figure, say you receive $1, 36.50 is going to be your break-even point. If it goes without you, well, sometimes that's going to happen, but at least you keep the premium. But regardless, you're going to get a better break-even point. So you got to look at it two ways. And remember, we always say this: do not sell a put if you do not want to own the stock. Don't do it just to make money, because if you don't have any intention of owning BHP at 37.50, don't make the mistake of just selling a naked put and saying, oh, well, if I have to, I'll deal with it when it gets there. Famous last words. We'll deal with it when it gets there. No, you don't want to be doing that.
No, puts are definitely a strategy in here. And then as we see it come through this 40, 40 will be a psychological warfare zone. I was checking the volume today, Ty, very high volume, obviously at 40. We know in Australian stocks, there is literally massive buyers at these round numbers. So that it'll be a bit of a war zone for sure. But if it gets through that zone, as Tyrone mentioned, our volume profile is going to be very strong around that 37.50, 38 zone. So we boxed it up just because that would be where we set an alert. The alert comes in. Of course, we don't pick it up straight away. And then we look for those reversal signals. We look for the lightning bolt. We look for the channeling range. We look for the double bottom, the inverse head and shoulders on the smaller time frames. And then we can take advantage of trade, because there's significant profit to be had if it turns around, but where it happens, we've got to be very particular.
And that's my point. If you're trading it, you need to wait for the reversal, right? That's just simple as that. If you're trading it, wait for the reversal. If you're investing, you can take evasive action. You know, you can sell the put, or you can just buy it at that level, knowing you're happy to hold it till it gets to $50 or 52. You know, you're going to collect dividends. You know that. Yeah. Zen, does that answer your question on BHP, mate? Hopefully that does. Hopefully it does.
All right, we'll take a couple of quick questions here, Ty, from the private community. So we have here, Dav G says, I had a trade on JHX. So JHX, James Hardy, not one of my favorite stocks, I must admit. Not because it's not going well. I just have personal vendetta on JHX. Stop 3 cents, just short of my target, and then reverse quite sharply. Any tips on that situation? Do you try to close as soon as it happens or wait for consolidation? So stops 3 cents just short of my target and then reverses. It depends on how your target was set. I think you can remove it. You may want to set, what I like to do is if I'm scalping or day trading, I would set an alert. So let's say this was the trade and I assume it was here. And you might have been buying it long and you're looking for, let's say, a point up here. Now, you can tell by this price action straight away. It's not incredibly traded. It's not a very, very, very strong stock from a trade perspective. So it gets up to this point and then it reverses. Now, I think you must have set it like here. Let's say 40.62, 40.60, something like that. And it's just stopped before. I feel like in this situation, Ty, you've just got to set an alert. You've got to box up the zone. And as it comes in here, you've got to watch it like a hawk. Sometimes it's better to close your profit at 80% of what your expectation is. And we have that kind of rule, don't we?
Yeah. It makes a big difference because it is amazing how many times, a really good position can fall short by just a little bit and completely reverse. Very, very annoying.
It is annoying, but I think it's all about setting alerts. I don't want to be chained to the screen. So I want to be on the golf course potentially like we had in that meme, Ty, and then at the same time have my great trading room. So setting alerts is probably one of the big stories. We always talk about scaling and setting alerts. Bradley B says, Tommy, you drawing the boxes, I assume, supply demand zones? Yes, around resistance. And are you making it off the wicks and or 1 or the 4 hour? It depends on the time frame that we find the best looking candles, but we will generally draw it from the wicks to the bodies, and then that will create your little area of interest. Wicks to the bodies, that range there, that chunk is going to be what you're wanting to look at for your turnarounds and setting up your alerts. Got a question coming in. Dabbling says, any chance we can take a look at Moderna? Yeah, we can have a look at mRNA for you. Moderna had a very nice trade here off the roll reversal. This could be, it could be setting up for a little bit of head and shoulders action, Ty. We've got left shoulder, head, right shoulder. You see that straight away? Imagine if that came down. There it is.
Damn.
The key zone.
Yep. Interesting.
Yeah, so I think here, if you're looking for the long side, you're looking for a 440 break back up to 460. So basically this 440 break, 460 next level. And if it goes underneath this zone down here, that 414, closure below that, we've got left shoulder, head, right shoulder. We close below, and we could be very easily going that full distance of the head. And that would be
straight into that zone.
370. Yeah.
What a shock. It plays out. Jay Nibble asks, out of curiosity, how long do you hold an average stock for? Do you mean like for us or for our clients? I mean, for us, look, the way you got to approach it, you got to look at it 2 ways. Are you an investor or are you a trader? Most of the time, professionals are both, right? They're going to have 2 accounts. They're going to have an investment account where they hodl the stock. They're going to hodl like their life depends on it. And they're going to have a trading account. And I think that's the best way to look at it, because the problem is if you get caught thinking that you need to hold or you're going to miss out all the time, you may miss on shorting opportunities or actually scaling or getting in and out at key market zones. So ideal if you had both, like 2 accounts, not like 2 positions. That way you can actually play both games on their merit, because there's nothing wrong with investing, right? Make no mistake. Investing is a very, very solid way to build a good income, to actually have a very good growth portfolio. You don't want to blur the lines between investment and trading, though. You definitely want to have 2 accounts where you separate them. Trading is trading, investing is investing. Because if you start making cross decisions, your investing goes out the window, really, to be honest, doesn't it, Tom? Like you just keep taking things out.
It's so important to segregate, Ty. I've seen people come undone here. I've been seen. It's actually the same as penny stocks. If you want to trade smaller stocks, and then you have, like, let's say most of your portfolio is Apple and BHP and Rio and those types of things, then you need to segregate for the style. And only load that account when you're trading the style. It's really.
But to give you an idea, like to give you an example, investment's investment. You could hold them for 3 months or 3 years. I mean, it could be anything, right? That's you can't really put a time limit on that. But really, if you were asking us for our average position, I mean, it can be anything from a couple of days. Sometimes we've traded stock where it hasn't even settled. Like, we're out of it before it's even settled. Exactly. So. Yeah, it really comes down to the move. If you're actually scalping it and day trading it, you can be in and out in a day or in and out in a couple of days. So there's no really predetermined time that you hold it. It's all about the price action. So for trading, it's all about price action. For investing, there is no time limit on investing. There just isn't. You've got to look at the bigger, longer term picture. You can't put a time frame on it.
We'll go some rapid fire here, Ty, just with a few questions coming in from the community. We have odd US dollar, obviously support down here, which is about to reach. This is going to be the key zone to look at. Look for a little lightning bolt off this zone if you like the long. Be careful around the 73.50 would be something I'd say. And if it gets underneath this level, I think we're coming back downtown. And that's going to be consistent with what we see in the dollar index and euro US dollar. So watch this zone heavily and just be careful if you're taking the longs to the 73.50. Hey, Ty, 20 moving average. I think that's going to be a danger zone for sure.
Yep.
All right. Next one, we've got Etsy. Etsy, a American company over here. Good company. Most people know it because they go and buy strange arts and crafts stuff that you can sometimes find. I've used Etsy. Have you used Etsy, Ty?
Nope.
Okay. I've used Etsy.
I've never heard of it.
No, don't tell me. Oh my God. Ty's boomering on us, guys. He's boomering. So here we have the channel range. I like Etsy above this resistance. Look, technicals are technicals, Ty. And there is a lot of left-hand noise, but I think if we lose the noise here for a second and we think about this price action, it's had a nice consolidation. It's broken above. It's consolidating again. Closure above. What is this zone? 221. And it should start to come through. Remember, these have seasonals in them. Around that time of the Black Friday sale, Cyber Monday, you tend to see November seasonals. I would suggest you go and have a look at Etsy, not so much Etsy seasonals, but maybe Amazon. And I think that these stocks trade off those types of seasonal events. So great price action consolidation here, looking for a breakout of the high. Another one we've got, we'll just do two more here. We've got Las Vegas Sands, LVS. This is a company that's been getting beaten down pretty heavily here, Ty. Look at this. From recovery to not recovery. What a phenomenon. It's almost like a ridiculous story, but you'll notice the trend line that we've had in here for a long time. We talked about this level. When it busted that, you can see it, guys. Boom, all the way down. And yes, this is a incredibly heavy support. This is actually pandemic lows. It just shows you shouldn't buy a company that it's figuratively going to recover when you buy Apple down here, you did well. You bought any other stocks, a lot of other stocks you would have done well. This one just really getting hurt. What do you think of this chart, Ty?
It's horrible. Yeah, it's horrible.
It is horrible. It is at the base.
Yeah. But it was a great sell once it broke that trend line, and it tested it too. Like, it came back and tested it. Look at the technicals on it. I mean, if you trade what you see, it technically broke the trend line, came up, retested it right on the 20 moving average. Bang! It wasn't like you didn't get your warning. If you were trading it, it was a really good short. I'd be definitely waiting for a higher high here. If price gets above those moving averages and you get the higher low sequence, the lightning bolt, as you know we call it, then it's happy days again. You start to go long, maybe even to the trend line again. But yeah, I'd be certainly waiting for that. Bradley says that I'm more of a boomer than Tom, and my investing account is probably all divvy. Is that right, Bradley?
Fully franked, Brad. Fully franked. There's no only fully franked for Ty. Is that right, Ty?
Well, I'll tell you what, Bradley. The next time you ask me a scalping question in the Discord room, I'm going to say, you know what, Bradley, I'm a boomer. I'm going to put my slippers on and my coat. You go see Tom about the scalping, because I'm just a long-term investor. I know nothing about scalping. All right, so let's just be ready for that.
Don't you worry. He probably will. He won't forget now, Brad. You put
I won't forget. I've got a very, very good memory.
$45 here for LVS is probably what Ty and I think. We don't like buying the base because we don't know how long it can stay here for. So we prefer to buy the recovery story, and that is when you get through the 45, 100%. You'll see that participation, and we've got very clean levels of TP. So we've got the 48 and then the 55. I think that if you like it down here, hey, all good, but yeah, it's not really great technical. Now, we do also have a question coming in from John Chang. Tai says, newbie question about the ultimate trading course, please. Will it be suitable for trading the ASX and US stocks? Absolutely, it will be. And tools to trade them. Look, this is not called the ultimate trading course for no reason. Ty, do you want to take it away?
Look, I'll tell you what, I'll give you a tip. Indices are often the most technically traded charts, right? So the technical analysis course is built on the fact that, technicals do repeat themselves and they're very easy to read when you know what you're looking for. Nothing trades better than, you only have to look at the SP500 and the ASX 200. They are trading poetry and have been for a long time. So they actually work even better on things like indices because while they're 24-hour markets for starters, especially the futures, but they are very, very technically sound, very difficult to manipulate. And the tools are all the same for all of it. So there's certainly no problems there. I'm going to answer the J Nibble says, who owns more Doge? That will settle it. Mate, Thomas owned Doge before even Elon was talking about it. He had the coin. He's got the original coin on his frame at the back behind him. He's got it.
Is that what that frame is? It's a picture of the dog, isn't it? Yeah. No, well, look, we both don't own the Doge, so therefore we're both the boomers of that. We'll take it equal share there.
Yeah, I agree.
Speaking of Doge, though, Ty, I want to talk about Bitcoin, but to end the show here because wowzers, look at this recovery. And I tell you what, maximum extraction, maximum pain was felt. That Litecoin thing was really a shock to the system, but it came back down. It went lower. That's a stop hunt, absolute stop hunt. And then it's recovered back, and we're now cracking this 47.5 as we speak. So if we close above here, I believe it's kind of like a Wyckoff accumulation here. I talked about in today's video. Obviously, there we have a very similar scenario. We hope now to get a little bit of coiling above the 47.5. But if it doesn't, this is the level where Bitcoin gets a lot more interesting. Ty, what do you think of that? I think it's actually getting a lot more tasty.
It is. It is. It's definitely starting to get tasty again and tradable again. Yeah, when the technicals escape Bitcoin, it's almost impossible to do anything with except guess. But when the technicals start to play the game again, you can definitely get involved in some of the shorter moves, and they're a bit more reliable too. So, good positive signs for a big recovery, like far out. It doesn't muck around, does it?
It does not muck around, but that's the thing with Bitcoin. You know, at the moment, it's in that kind of seasonal strength. We've seen it have great Novembers. If it's anything like 17 October, November was strong seasonally, and then it hit December, and it was just like, because I think it's that event where people go and they talk to people over Thanksgiving, and they're like, "Hey, Uncle Steve," and Uncle Steve's like, "What's up?" And he's like, "Uncle Steve, I made $15,000 on Bitcoin." And he's like, "What is this? What do you mean?" And he's like, show me how. They're clicking it. They don't talk anymore. They're just watching Bitcoin price for the rest of the Thanksgiving. The turkey's barely eaten. Yeah. Anyway, I like the Bitcoin charts. I think it looks pretty good. And yes, it's all a bit of fun. All right, guys. Well, thank you so much for joining us. Ty, do you have anything else to announce? Is there any more special announcements for today's stream?
No, I think we've pretty much got it covered. But like I say, if you're interested in the options course, I know a lot of you are. Tomorrow, the Q&A, I'm going to go into the details on how you can secure your spot, and it's going to be available very, very shortly. Okay, so one not to be missed. Of course, if you miss it live, make sure you catch the replay. I'm going to open it to the public tomorrow too. I think it's going to be a public one. Okay. Let's do a public one tomorrow. All right, so I'll put the public link into the Discord public room, so hopefully all of you can jump in. But if you do miss it, just jump into the replay because it will have some important information. Thomas, is there anything you want to say about the mentoring? I know you've got a link there somewhere. It's going to be great, guys.
Look, I spent a bit of time on, and so did Ty. We built a program that is built around. It doesn't matter whether you like stock I mean, there is a lot of stock in there, don't get me wrong, but it doesn't matter whether you like stock, currency, commodities, you guys are going to get a lot of value out of it. Read the site. Obviously, Tyron and I take the lessons, so don't ask me that question, guys. We do the session, and we're super passionate about it, and we're super passionate about sharing with you the next level, and that's the level we keep a little bit. We keep a little bit back, don't we, Tyler? A little bit back, but we're putting it all out there now, so it's
so 9 o'clock p.m. Melbourne time, guys, for the Q&A tomorrow night. So thank you, Mark. Mark's one of our current students at the moment, so he's probably more than halfway through it at the moment. So 9 o'clock tomorrow night, and that's because of login issues. That's okay, but it seems to suit a lot of the overseas people as well. So I appreciate that. Obviously, it's early morning, and we do really appreciate every one of you for joining us. I know some of you are getting up very, very early in the morning to view this webinar, and some of you are staying up very, very late. So we appreciate each and every one of you. We'll catch you in the Discord room. Thomas's live stream starts in about half an hour. So if you're looking forward to that, you haven't got long to wait, and I will see you tomorrow in the Discord room and in Q&A. Thanks very much, everyone.
Thank you so much, guys. We'll see you very, very soon with some more content. Bye for now.